Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, December the 8th, 2010, and like we do every night, it's time to look at the markets, so check it out. Okay, there's a couple of major markets I want to be looking at today. First off, look at gold. What we have here about 8 weeks ago, we told you she was no longer in that short-term bullish trend higher. She had back here, she turned that around. The momentum trade had been depleted. Basically, she'd peaked and she'd run up here and then pulled back down, but she's still making new highs and pulling back down. Basically, what I'm seeing here is not a bullish trend or a bearish trend. It's just consolidation right now. Okay, we did see potential for it to break down, but it actually never came about happening. She's just basically trading in here, but there's some volatility. Notice there's a bunch of moves to the upside here, supports way down here. So the pullback here, even though the size of it, I know CNBC, everybody was talking about it a lot today, was talking about how much the price of gold had fallen in a single day and this and that. And it's not really that big a deal. Back here, you did the exact same thing. It was not the end of it. People are noting, though, that you had a high point here, another high here. It looks like a potential double top. Well, look, that's just potential. All right, what we're talking about whenever you're looking at short-term trends is what's going on right now, not what might happen later. Okay, that's where you get into the whole midterm stuff that we talked about before. But right now, we're looking at this just saying short term, what is she doing right now? Well, right now she's just trading in this little channel here. It's neither bullish nor bearish, and I just leave it alone. I can find better opportunities on the long side as well as better opportunities on the short side. So I'm not going to be trading this either bullish or bearish, but I definitely wouldn't, uh, go out there and try to short gold or go out there and try to buy. Just move on. Okay, a quick look here at the Hang Seng Index. If you're watching what's going on over there in Asia, the Hong Kong Hang Seng, you've been watching this particular chart. You do have a potential head and shoulders formation here. You got this move here, all right, and then the head pulling back down, and then rolling over here, possible shoulder formation. This would be the neckline here and here. Okay, draw those low points right there. If you break down below that, that would confirm a head and shoulders pattern, but you'd have to break down below and close below that line in order for that to be there. Right now what we have is what was a bullish uptrend here, but then that got shot down because you had a stop loss limit at your low point here, and that got taken out right there. So you're no longer bullish, but you're not bearish at the moment either. From a short-term trader's trend perspective, this guy right here is just doing about the same thing gold's doing, kind of just playing along here, hasn't really done anything. But there is news expected over the weekend with their rates. They could possibly juice their market, so look for that to be a driving force here. Right now, everyone's expecting rates to increase over there, and that would actually continue to drive markets in the same direction. So what we're saying here is we did call this as a sell signal in this particular case a few weeks back, but right now I would not be a bull or a bear here on the Hang Seng. Okay. Okay, looking over here at the U.S. markets, basically you're flat. You're about 13 points by the close, down intraday, just bouncing around. And what that is called consolidation for the past 1, 2, 3, 4 days right there. You're just trending sideways on a previous resistance, which you can no longer see back here. We showed it to you guys yesterday on the longer term chart. You can see the previous resistance is now acting as support. You're bouncing around here. It's no big deal, but the overall theory and sentiment on Wall Street is bullish, which means whenever the market pulls back down here, they're going to be buyers here. They're going to be looking for all these little dips here as buy opportunities, anticipating a move to go higher. And with all the stimulus going on by the Fed, that's what's going to be driving it higher. And there's no thing that I believe can stop that is a major problem overseas. Maybe something could happen over there with the war and whatnot that would, bring markets down. But ultimately, the only thing I see superseding the Fed's monetary policy would be a great big explosion over there in Europe's credit crisis issue. But as long as that's shelved, that's no longer a problem. Now, a lot of people have been asking me, your midterm view is very bearish, your short-term view is very bullish. Are you, forgetting your midterm? What's going on? That's it. My midterm remains my midterm view. There's nothing's changed about that. The only thing that's different now is that the Fed has stepped up and said, oh, and by the way, we're not only going to print enough money for the U.S., we'll go ahead and help pay for what's going on over there in Europe. Well, that really puts out a lot of flames there in Europe because the big concern has been can Europe afford a bailout of something like Spain or something like that? And a lot of analysts have said no, that can't be done. Well, when the U.S. throws their printing press out there, well, now all of a sudden that kind of calms the nerves, right? Doesn't mean the problem's resolved, doesn't mean any of that, but for the moment, it has lifted a lot of the fear from Wall Street. Now, the only thing that's currently affecting markets short term is a bullish trend to the upside. So we're trading that on the long side and short term, and we're making money doing so for the past couple of weeks. So I see no reason to stop doing that at the moment. Okay, if we break down below this low point here of 10,928, we break below that stop, then all of a sudden that trade's no longer viable. There's no longer an uptrend in the moment, and so then we would actually step away from that. That's why we're keeping really tight stops on all of our long positions right now, our long trades. But until that happens, we can still go higher, and therefore I'm going to make money on the long side on short term. Okay, that's my overall view of the U.S. markets, not just the Dow Jones, but that's going to be the same thing for anything in the U.S. here. Okay. Okay, a quick look here at the FTSE London Financial Times Index. Whenever I want to see what's going on over there in Europe, I look at this chart. You can look at others, but I prefer this one. And what we've got here is the same bullish uptrend right now, currently in effect. And as long as price activity remains above this green line right here, okay, but stop is at 5518. As long as it remains above that, I would continue to look for moves to the upside there in the markets. You do have the Ireland issue going on over there. They're voting on their budgets and this and that, but keep an eye on that. If it blows up again, then look for world markets to follow everything lower again. But I mean, that's been the #1 catalyst for U.S. markets to drive lower as of late, has been what's going on over there in Europe. But as long as that problem remains under wraps, then it's not a concern for Wall Street. Okay, that's the only thing you've got to be aware of from a bull standpoint, is if that thing blows up over there, then the short-term bullish trend will end. Okay, now you know what I know. Before we look, if you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. Now we can look at our disclaimer. The disclaimer, read it and weep. God bless, take care, and I will see you in the next video.